Hello, Tiernorts, and welcome to this daily market commentary for Tuesday, June the 18th, 2019. Hoping everyone's had a good start to the week, and hopefully that success will continue through. We have a couple of very interesting days ahead of us. Today was one of them. Sometimes the day before a Federal Reserve meeting, especially when you've got a two-day meeting, the day one where you don't hear anything out of the meeting, can sometimes be a little bit dull. You get a bit of a lull in activity. That was not going to be the case today. Crypto markets, however, did decide to take a little bit of a breather from the recent frenzied increase in activity, with most major coins down between 1% and 3% on the day. I've started to see, some arguments that the crypto world over the past few weeks has been a beneficiary of the recent drop in global bond yields, and given the continued action in bond markets, it certainly appears to be potentially a valid point as yields start hitting some pretty low levels we've not seen since the financial crisis back in 2008, and traders go looking for some more significant returns. So crypto may well have inadvertently been a beneficiary of that. But for today, at least, a new high would be a step too far, with Bitcoin falling back to 9,100, having actually touched 8,900, I think, sometime during the US day, and Ethereum dropping down to $264 as well. Most of the talk on the crypto front today was really about Facebook's new cryptocurrency and the potential size of the audience it's going to have. Obviously, this is still, it's still a ways away. Not supposed to come out till next year, but we definitely see a lot of headlines coming out. Looking at the major news services, CNBC, looking at the BBC, etc. Everyone's carrying it as a front page piece. So it's an exciting time where Facebook's concerned with broader adoption to a mass market. So it'll be interesting to see how that plays out. Moving on to FX. Well, FX would really take its cue initially from lower yields. ECB Chairman Draghi made some dovish comments earlier in the day, saying the ECB will implement additional stimulus unless the situation on growth and inflation improves. That obviously sent European yields down even lower, with French 10-year yields touching almost zero. Which is certainly something we haven't really seen since 2008. This also saw euro against the dollar drop down to a low of 111.81 from around the 112.40 area, and that in turn dragged sterling down to 125.06, and also Aussie down to a low of 68.32 against the dollar. European equity markets were actually pretty happy about the potential increase in stimulus, as you would expect, sending the major bourses up higher by around about 1%. By the time we got to the beginning of the US day. It also acted as a signal for a strong open to US equities as well, with the Dow Jones futures showing a gain of about 150 points prior to the open. Just after we opened, the equity markets opened in the US. The market sort of got the tweet it was looking for from President Trump, where he announced he would be meeting Chinese President Xi at the G20 meeting in Osaka. Said it had a positive conversation earlier in the day, and this immediately saw a positive reaction in the stock markets, with the Dow Jones jumping as high as plus 400 points, and the DAX in Germany up over 2%. I think the market's getting a little bit carried away here, because you kind of like the market's hoping for a rate cut in the US, and it's also hoping for a trade agreement between the US and China. The Fed is no fool; they know full well that if the US and China can come to a trade agreement, the necessity for a rate cut might diminish very quickly. So, be interesting to see how that one plays out. The market might be getting just a little bit ahead of itself, expecting something to happen tomorrow. But hey, we'll wait and see. Stranger things have happened. The main FX beneficiary from Mr. Trump's tweet would be a risk-on trades, which took Aussie back to 68.80, sterling up to 125.50, and dollar yen up to 108.50. Volatility in the FX market today is certainly not something you necessarily see before a Fed rate decision. More volatility you see after a Fed rate decision. But as we reach the end of the US trading day, dollar yen is back to 112. Euro is back to 112. Dollar yen is back to 108.50, and US stocks closed just off the day's high, with the Dow Jones up over 350 points and the S&P up over 28 points. All eyes on the Fed tomorrow. So from a technical perspective, what I wanted to do today was just bring up a medium-term euro chart. We've got a 2-hour chart here, which has been up in front of you. And when we come into a major economic event like a Federal Reserve meeting, one thing I do like to do is just take a look at the charts and look at some medium-term levels of resistance and support. The short term, if we get a surprise move, it's not going to mean a whole lot. We're going to see a bit of a gap in the market. But here I just really wanted to highlight support ahead of 111 down at 111.07, and what a high we made last week. We made a couple of highs there above 113.40. The highest one I think being 113.48. That should act as good resistance to the top side. So keep an eye on that, and wish you the very best of luck with all your trading tomorrow. Just do keep in mind that the actual outcome of the meeting will be announced at 2 p.m. But there was also a press conference at 2:30 p.m. And that can often be very interesting and can add a little bit more color to the Fed's thinking. So just be prepared for that if it's not on your radar. And with that, I wish you all the best of luck, and look forward to speaking to you tomorrow. Cheers.